The New York State Comptroller's Office of Unclaimed Funds is pleased to present this video on the due diligence process. Did you know that as a company holding inactive accounts or unclaimed funds, you, the holder, are required to conduct due diligence before submitting your abandoned property report to the New York State Office of the State Comptroller? But what exactly is due diligence? Who has to perform due diligence? And when should you perform due diligence? Due diligence is attempting to contact the owners of inactive accounts or unclaimed funds before sheeting or transferring the funds to New York State. The law requires companies to attempt to contact the rightful owner by mailing notices and sometimes publishing in newspapers. It's good customer service, and it's required under Section 1422 of New York State's abandoned property law. Remember, due diligence is not optional. How exactly do you meet the due diligence requirements? The first step is to send a notice by first-class mail to every person or business with a valid address who is expected to appear on your abandoned property report. You're required to send your notice at least 90 days before your final report is due, but you can start sooner. What information should be contained in this notice? You should advise the owner that their unclaimed funds will be reported as abandoned property and will be remitted to the State Comptroller unless the property is claimed before the remittance date. The remittance date is the date you will submit your report, and that date should be included in the notice. A deadline may encourage the owner to contact you. You don't have to send a notice by first-class mail if you do not have an address for the owner, or if you can demonstrate the address you do have is not current. If a prior mailing was returned as undeliverable, you don't need to send another mailing. By law, reporters of abandoned property may roll up abandoned accounts valued at $20 or less and group into one aggregate amount for each property type. If you aggregate items, you will not need to send a notice for these items. If the owner contacts you and you are able to reunite the rightful owner with their unclaimed funds, remove the item from your abandoned property report. We recommend notifying your customer service staff that the notices are being sent and make sure they know how to reactivate an account based on a due diligence response. If you do not receive customer contact as a result of the notice by first-class mail, the second step in the due diligence process is to send a notice by certified mail, return receipt requested. You are required to send this notice to owners whose funds have a value over $1,000 at least 60 days before your final report is due. Holders are required to send notices by certified mail on dividend reinvestment plans regardless of the value. You do not need to send a notice if the account is valued at $1,000 or less. However, in the spirit of the law, we ask you to send a notice if you have multiple accounts for one owner and the total of the accounts is more than $1,000. You do not need to send a notice by certified mail if you received a claim and you are in the process of reuniting the owner with his or her property. Also, you do not need to send a certified notice if the first-class notice was returned as undeliverable, or if the last known address you have for the rightful owner is in a foreign country. Costs paid for notices by certified mail may be deducted from each item as a charge. You may not make a bulk deduction against the final remittance. The cost of notices by certified mail for dividend reinvestment plans may not be deducted from the item. Costs associated with notices by first-class mail may not be deducted. How can you increase the likelihood that your customers and clients will read your notices? Printing keywords or phrases such as time-sensitive or response mandatory on your envelopes may increase the possibility that the mailing will not be mistaken for a statement or junk mail and discarded. A short but reasonable deadline may also increase the likelihood of a response. Give your customers several options for responding to your contact, such as including a stamped self-addressed envelope or providing your fax number, mailing address, or email address. You can include a telephone number, but you should follow up on verbal contact with your customers and obtain a response in writing. And use understandable words in your communications. For example, say remit to New York State instead of a sheet. If your company issues securities, the U.S. Securities and Exchange Commission, also known as the SEC, has additional requirements if your accounts include dividend reinvestment plans or other shares. Refer to SEC's Rule Number 17AD17, which provide guidance on searching for lost security holders and sending required notifications to unresponsive owners. If you fail to perform your due diligence, you are still required, by law, to report any abandoned property you are holding. In addition to due diligence notices, certain industries are also required by law to publish notice of unclaimed funds in at least one newspaper. Refer to industry-specific sections in the handbook on the OSC website for additional information on publication requirements by industry. We hope that you found this presentation informative and beneficial. If you have any further questions regarding the due diligence process, please contact our reports processing unit.